Welcome to episode 7, the final episode of the Investor Pitch Deck Masterclass Mini-Series. You've built your 11-slide deck and learned how to present it. Now we're covering the 100 questions investors will ask you at some point in the diligence process. And if you just found this episode through search, welcome. This episode builds on episodes 1 through 7 of the mini-series where we built a complete investor pitch deck and learned how to present it. Go back and start with episode 1 to get the full picture. Why these 100 questions matter. Investors are stress testing your assumptions. They're looking for red flags. They are likely interested in investing, and now they're looking for reasons not to invest. And they're checking to see if you're coachable. Answer confidently, you're fundable. Fumble, they may pass. That's what separates funded founders from everyone else. Preparation. Some founders wing it. You won't. You've practiced these 100 questions. That's why you'll get funded. How to use this episode's information. I'm walking you through the major categories of questions and giving you examples from each. I'm not reading all 100 questions. That would take forever. You would have a tough time remembering them all, and it's better in written form. Instead, after you've listened to this episode, download the complete list of 100 questions from the show notes. Get it, print it, go through every single question yourself or with your co-founders and write down your answers. The good news is that now that you have your investor pitch deck, you likely know a lot of the answers already. This isn't optional. It's required homework if you want to raise money successfully. Colonel David Hackworth said it best. If you find yourself in a fair fight, you didn't plan properly. Plan properly here because it can change your life and the trajectory of your company. Before we dive in, I want you to notice a pattern in these questions. Almost every question in every category tests one of 3 things. Number 1, can you execute? Number 2, do you know your numbers? And number 3, are you coachable and or your team in some format? That's what investors care about. Keep that in mind as we go through all these categories. Category 1, company and market questions. These are big picture questions about what you do and why it matters. Top 3 examples. What does your company do? How big is the market opportunity? What percentage of the market do you plan to get over what period of time? What investors are really asking? Do you know your business? Are your ambitions realistic? Can this be big enough to return or fund? You have most of these answers from your deck already. Practice saying them confidently. Category 2, team questions. Investors bet on people, not just ideas. They're going to dig into your team. Top 3 examples. Who are the founders and key team members? What relevant domain experience does the team have? What's the CEO's blind spot? What investors are really asking? Can this team execute? Are they self-aware? Are they coachable? Do they have experience to scale? Self-awareness matters here. If you can't admit your weaknesses or your teams, you're not coachable. Category 3, product and differentiation questions. Investors want to know what makes your product special and why customers care. Top 3 examples. Why do users care about your product or service? Who are your competitors? What gives your company a competitive advantage? What investors are really asking? Do you understand your market? Is your advantage real or imaginary? Can someone copy you easily? Have a demo ready. Make sure it works. Practice it. And never say, we have no competition. You do. Go back to the 3rd episode in the mini-series, that's episode 38 here on the Marketing Podcast, and review what we went over talking about your competition slide. Category 4, traction and metrics questions. Traction is proof. Investors want to see numbers. Top 3 examples. What early traction has your company gotten? What is your customer acquisition cost and customer lifetime value, otherwise known as CAC and LTV? What is your churn rate? And what are the primary reasons customers leave? What investors are really asking? Do you have a leaky bucket? Are your unit economics real? Do you know what drives your business? If you don't know your CAC or LTV, figure them out. If you're predicting them, have all the assumptions behind them. The marketing tab in your financials that you did will show investors you thought this through. Category 5, go-to-market and sales questions. How will you actually sell this thing? Top 3 examples. How does your company market or plan to market its product and services? What is the typical sales cycle? How does your product fit into your customer's existing workflow? What investors are really asking: do you have a realistic plan to acquire customers profitably? Is adoption easy or painful? Be specific. We'll do Facebook ads. Isn't enough. Why Facebook? What's your CAC target? What's working? By the way, everyone thinks they can buy ads and scale profitably. It's possible, but you better have a really good answer with your results to back it up. Category 8, financials and funding questions. This is where investors dig into the money. Top 3 examples. When will your company get to profitability? How much are you raising in this round, and what will you use it for? What is the minimal viable success for this round of funding? What investors are really asking: do your financials make sense? Can you defend your assumptions? What's the absolute baseline you must achieve to survive to the next round of funding with an increased valuation? These are make or break questions. If your financials don't work, the deal is dead. Category 7, risk and legal questions. Investors want to know what could go wrong. Top 3 examples. What do you see as the principal risks to the business? What key intellectual property does the company have? Would any prior employees or team members have a potential claim to the customer's intellectual property? What investors are really asking: what could kill this business? Are there hidden landmines? Be honest about risks. Don't hide them. Investors will find out anyway. Category 8, exit and vision questions. Investors want to know how they'll make money. Top 3 questions. What's the likely exit? IPO, M&A, something else? Do you have a strategic partner or investor? Who will be the likely acquirers? If I gave you double the capital you're asking for today, how would that change your roadmap? What investors are really asking: can this be a 100x return? Are you thinking big enough? This isn't about saying who exactly, but more reassuring themselves that you know this has to be and can be a huge win. Know your comps, have them ready. Category 9, investor-specific questions. These are questions about you and them. Top 3 examples. Are you talking to other investors? Which investor on our team would you like to work with, and why? What happens to the business if you are incapacitated for 3 months? What investors are really asking: have you done your homework on us? Is there competition for this deal? Is this a one-person show or a business that doesn't rely on one person and has systems to do so? Do your homework on the firm. Know which partner you want to work with and why. Here's the top 10 must-know questions for you. What does your company do? Your elevator pitch, 10 seconds. How big is the market opportunity? Know your TAM, SAM, and SOM. What is your competitive advantage? Your moat. Be specific. What early traction have you gotten? Real numbers. What is your customer acquisition cost? Know this cold. What are your unit economics? Revenue per unit minus cost per unit. When will you be profitable? Month and year. How much are you raising and what will you do with it? Your ask. What milestones will this funding hit? Tie money to outcomes. And who are your likely acquirers? Know an exit strategy. If you can answer these 10 confidently, you're 80% of the way there. But don't stop at 10. Go through all 100. The final question. And here's number 100. And it's a classic. What's the one question I haven't asked you that I should have? This is your chance to highlight a strength that didn't fit into the rest of the pitch. Have an answer ready. Maybe it's a key partnership you closed. Maybe it's a competitive advantage you didn't mention. Maybe it's a metric that's off the charts. Don't waste this opportunity. Download the full list of 100 questions from the show notes. And here's your 3-step action plan. Step 1, go through the list yourself or with your co-founders. Write down answers to every question. Some you'll have from your deck, others you'll need to research. Others you'll need to think through. Step 2, practice mock pitches. One person plays investor, the other asks random questions from the list. The other person answers, switch roles, do this at least 5 times. Step 3, record yourself answering the top 10 questions. Watch it back. Notice your filler words, your hesitations. Do it again until you sound confident. This will take time. Being great at anything does. The founders who are prepared get funded. The ones who aren't, don't. All right. Here's what you've accomplished and you should feel really good about. You created a complete 11-slide investor deck. Slide 1, your elevator pitch. You can hook anyone in 10 seconds. Slide 2, your problem slide. You've identified the painful problem you're solving. Slide 3, your solution. You've shown how your product solves it. Slide 4, your market slide. You've proven the market is big enough. Slide 5, go to market. You've mapped out how you'll acquire customers. Slide 6, your traction and milestones. You've shown proof you're making progress. Slide 7, your competition. You've identified who you're up against and how you'll win. Slide 8, your financials. You've built a financial model showing the path to profitability. Slide 9, your team. You've shown you have the right people to execute. Slide 10, funding. You've made your ask clear and connected it to milestones. And slide 11, your summary. We wrapped it all together into one memorable slide. In episode 6, you learned how to format your deck, time your pitch, handle interruptions, and build investor relationships over time by pitching early, sending regular updates, and proving you execute. And now, you have the 100 questions investors will ask, and you know how to prepare for them. This is your complete toolkit. You have everything you need to walk into any investor meeting with confidence. You have a complete pitch deck to market your company. You know how to present it, you know how to build relationships, and you know how to answer the tough questions. That puts you ahead of 99% of other founders. What to do next? 2 things. First, download the 100 questions from the show notes. Go through them, write your answers, practice mock pitches, be ready. Second, if you're new here and found this episode through search, go back to episode 1 in the mini-series. That's episode 36 here on the Marketing Podcast. Start from the beginning. Build your deck properly. Don't skip steps. This masterclass is designed to work as a complete system. A few final thoughts. Congratulations on making it through this entire masterclass. You've put in the work. You've built something real. Now go use it. Pitch investors, build relationships, send those monthly updates, prove you can execute, raise money, build your business, make money. Here's what separates funded founders from everyone else. Preparation. You're now prepared. That's why you're going to succeed. You've got this. Go make it happen. Thanks for listening. Your marketing move.